Hi there. Welcome to the first session of our Investors Club. So, the idea behind this club is that we will together learn how to invest in a few different asset classes and see where it takes us. So, the problem I've got is I was having a look at my kids' FNB savings account and was horrified to be reminded that both bank accounts, one for Callum, one for Hannah, are 0% interest earners. So the money's just sitting there losing value year after year because of inflation. So I think there's a better way to that, a better way to deal with that. And yeah, I thought there might be some other people out there who are looking for ways to illustrate firsthand to their kids what that better way is, and there might even be a few adults along the way who might learn a couple of things. Um, Yeah, so the exciting thing about this journey is, yes, we might be able to invest in some interest-bearing, savings accounts, but yeah, there are other options like shares where you end up, being a shareholder of one of your favorite brands, perhaps your bank institution, or the car you drive, or Netflix that you watch all the time. So yeah, stick around if you want to participate. So the strategy here is there are three angles I'm looking at. Number one, the hub. So make sure your child has a bank account, not just a normal bank account where money can be deposited there for holiday money or for birthday gifts, and or if there's fundraising efforts to save towards a bicycle, or some sort of asset. So it's great for each child to have their own bank account. Do that if you haven't got it. I'm sure most people do, but if you haven't, hurry up and go visit your favorite bank to get an account set up. Number two, we'll then look at some sort of engine that's going to be separate to that, and that's where long-term and longer-term investing will happen. So for this, we'll be looking at an Easy Equities bank account, but there are others out there. The one I'll be illustrating with is Easy Equities, where you can choose from various asset classes. And so, yeah, the idea here is we're all learning. So the third angle we're looking at here is every 3 months at least, let's get together. And the idea is we're going to see how each of these assets are performing. And if you can visualize a racetrack, and one of the assets might be the tortoise, and that's the savings account that's just going to be steady, plodding along, nothing exciting, but definitely always going forward. And there might be the cheetah on the racetrack that's much more exciting, a bit more volatile, sometimes up, sometimes down. Hopefully, going in the right direction, but not always guaranteed. So, looking at the first asset class, fixed deposits, or a savings account, basically. The idea here is, and I think one of our easy options is, once your bank account set up, let's speak to our banks individually. Your favorite bank. If you have an account with Standard Bank, contact Standard Bank and say thanks for opening up the current account. You'd now like a fixed deposit account for the child. And the idea here is the longer you fix it, the higher the interest rate. So yeah, perhaps a 32-day account get you 6.5% interest. It's certainly a lot better than that 0% that I'm currently getting with FNB in the current account. So I think that's our first easy win. And perhaps it's a couple of grand you put in there. If we're gonna choose an investment pot of, say, 10,000 rand, let's put the first 2,000 into a fixed deposit. Once our Easy Equities account is set up, so I think that's going to be the next step is going to be opening up an Easy Equities online account, and I'll take you through that in the next video. We can then choose to invest in something called government bonds. So again, the underlying issue there is the impact is you're getting interest income, but that bond itself can also change its capital value, so that can fluctuate, and we won't get into too much detail now on that. Another savings account type is called the tax-free savings account, TFSA. And most people roll their eyes with this and say, "Oh, it's just another gimmick to earn, low interest amounts." But no, you can actually have a tax-free savings account where the actual underlying asset is equity, is a share, and it doesn't have to be a local share. It could be, in this instance, a world equity ETF, which tracks worldwide equities, and and has a currency hedge in there. So if the rand weakens, your value of investment goes up, even though perhaps the global share prices are flat. It will still go up because of the rand weakness. So that's exciting. Bear in mind there are some limits here. You can only put 46,000 rand per year, and once you get to 500,000 rand in your lifetime, that's it. You're done. And every time you withdraw from the fund, you can't put it back in. So basically, you get this 500,000 as a once off investment opportunity, and it needs to be definitely your longest term kind of asset. Asset three we're looking at is managed funds. So unit trusts and balance funds are like having a professional pilot. So someone is running it for you, and their job day in day out is to manage the assets in there. And this is nice for you to just sit back, and the asset manager will choose what what equities are being invested in. And there's a fee for that. So these are a bit more expensive in terms of what the annual effective annual cost is. But yeah, there's definitely a place for them, and we'll get into that later. And then once we go down the investing in shares option, we'll start choosing a couple of shares. So I'll recommend a few to my children. But yeah, and we can just basically look at the practicalities of investing in these shares. And the idea is you will actually be an owner of, if not one of the shares, perhaps a portion of those shares. And we can then see the first-hand impact of receiving dividends and the share price going up and down. Netflix will be another fun one to help our children understand, the real world impact of owning shares. And then perhaps your vehicle, your favorite vehicle. So here I've chosen a Suzu. But yeah, Toyota is also listed, I think, on the European Stock Exchange. And yeah, we can go through the practicalities of buying these shares in easy equities. So here's a little summary of what we're going to be looking at. So here I've suggested 2,500 Rand in a fixed deposit, TFSA of about 3,500 Rand, a government bond of 1,500 Rand, and then perhaps a total amount of 2,500 spread over a few of your favorite companies that you know about. And we'll take it from there. All right. So for now, I've mentioned about opening up your bank account with your favorite bank. Um, we will need to get onto opening an easy equities account on the online platform. So to do that, you'll need your child's ID number, which will be on the birth certificate. At some point, you might need to get a SARS number for the child, but for now, it's not a big deal. Just bear in mind it may become a thing if the portfolio grows. And yeah, easy equities. Today, I registered myself, and I was then able to, under my profile, add and create a brand new profile for both Hannah and Callum. It took 2 minutes each. And there'll be a couple of days now whilst it goes through the verification process and all that before we can start trading. So, yeah, all good and ready to go.